I'm here in Toronto with Bharat Masrani. He is the CEO, of Toronto Dominion Bank. Bharat, nice to see you.
Great to be here, Erik. Thanks for having me.
You're probably expecting me to begin with a question about the Canadian housing market.
Why not?
I'm going to start with Nafta instead. How do you like that?
Even better.
These talks between the United States, Canada, and Mexico don't appear to be going well at all. Here's what I'd like to know from you. What if the unthinkable happens and Nafta collapses? What then?
Well, it's easy to start thinking of all these scenarios, but any trade talks, if you look at the history of trade talks, they go through ups and downs. A lot of information gets leaked as to how they may be going, how may not, may be progressing. So I wouldn't start, panicking or worrying at this stage. We're early in the process. The great thing about Nafta is it's been terrifically important for all three countries. It's increased trade by manyfold. It's created lots of jobs, lots of opportunities. So I am sure at the end, sensible minds will prevail and we'll get to a reasonable outcome here. That's the scenario that I'm working under.
Well, there are a lot of other people who want that to be
correct
and may be operating with it as the base case scenario. But the reality is that there is a risk, perhaps more of a risk now than ever before, that it might not happen. It might not work out that way. I have to believe that you've stress tested your credit portfolios for just such a possibility. What did you learn?
Well, firstly, from a big picture perspective, before NAFTA, there was a free trade agreement between Canada and the United States. There are a lot of folks who are right now debating whether that agreement will be put in force because that's how the mechanism worked under NAFTA. If that's the case, then perhaps, things will be manageable. If not, without a doubt, they'd be impactful to the Canadian economy, to the U.S. economy. Lots of jobs will be lost. We've done stress testing. We are a bank after all. But my expectation would be that there will be some kind of a transition if we get to the unthinkable that will allow industries and various sectors to adapt to the new reality.
I'd be careful about making such assumptions. Just look what's going on across the pond, so to speak, right, between the Brits and the Europeans. Everybody thought that would be a convenient, acceptable transition to Brexit. That's not happening.
Well, we're not in 2019, and I won't speculate what might or might not happen. There's still lots of negotiations to be had.
What kind of an impact would it have on your company, on your credit portfolios, on your clients, your commercial and corporate customers, if, again, assuming the worst, NAFTA breaks down and we don't return to the U.S.-Canada Free Trade Accord?
Well, it would be dramatic, not only for banks, but any industry on both sides of the border. It will be dramatic for the American economy, and hence any major player in America would be impacted, as they would be in Canada. But like I said, sensible minds do prevail in this, Erik, and it's one thing to, scaremonger and fearmonger on this. My expectation would be that at the end of the day, we will have some kind of, and by the way, I should add that there are opportunities to improve NAFTA. NAFTA was done many, many years ago. A lot has happened, innovation, technology, so there are opportunities to improve. And I'm sure the negotiators are looking at that, and we will come up with a solution here that will work for everybody. That's my expectation. As to how we get there, it might be stressful, and we might be quite all right.
Now let me ask you, if I may, about mortgages. Just today, Canada's main bank regulator, the Office of the Superintendent for Financial Institutions, released more restrictive rules for mortgage lending. The banks are required to stress test borrowers at higher interest rates. What kind of an impact is this going to have on mortgage supply?
Well, I think overall this is a good thing. Canada has had a very robust housing market, specifically in some of the regions like Toronto and Vancouver. So, some kind of policy moves, and we've had a few of them over the past couple of years, is a useful tool for policymakers to make sure that we are not getting into a situation that's going to mean disruption to the financial markets or whatever the case might be.
Is that to say you think this new step will cool those housing markets?
I think we've had many steps here, and this is one more step. I think it's a useful tool to have. We've had some kind of, steadiness in the housing market in Toronto over the past few months because of some of the other changes that were introduced a few months ago. So I think we are headed for a more sensible way of cooling the housing market, and I think policymakers are on the right track here.
It raises some questions, though, because between OSFI, the Bank of Canada, the Department of Finance, the provinces, many steps have been taken in an effort to cool the housing market, to keep prices from rising as quickly as they have been rising, with not that much effect. Yes, perhaps it's plateaued a little bit, but prices have started to rise again, as you're well aware. Does it make sense to you, sitting in your chair, that regulators should keep trying to do more, or is there a point at which enough is enough?
Well, firstly, when we talk about housing, it's more of a regional story. I think overall, the national market is fairly well balanced. There are certain regions where you would say it's overheated a bit. The flip side is that there is not only a demand issue in many of these markets, there's a supply issue as well. Municipal approvals, the amount of land available for single-family homes. So there is supply issues, and I think, at some point we will have to make sure that there's enough supply available for the population
That's
growth.
why I ask, because the more regulations and restrictions you put in place, the more you run the risk of unintended consequences in markets outside Toronto and Vancouver.
Well, so I think the point being that these policy moves will help to stabilize the market more so than we had before. But over the long term, we need to increase the supply of housing stock because these are growing populations. Toronto attracts a lot of new immigrants. This is a vibrant economy, and we will need to have enough supply to make sure that we have a balance more so than we have today.
Barrett, I understand you have some concerns about MiFID II, this new set of financial regulations that the Europeans are going to adopt in January, on January the 1st, correct? Why does MiFID II concern you? You're the CEO of a Canadian bank who generates 92% of his revenue in Canada and the United States.
Yeah, but we have a large enough business in Europe. I think all these markets are more interconnected than people realize. When you do any major change in any major jurisdiction, it does have an impact on your business. Canadian banks fund themselves internationally, so all the impacts will be felt in some way. Perhaps less so than European banks might feel, but to say that this will be not impactful at all would be an understatement.
Where will TD feel the impact and how?
I think the initial impact would be for our European-based business. We've been in the UK for more than 100 years. We have a very large, what we call the sovereign supranational business. We are a large underwriter of those instruments. And without a doubt, it'll be impactful there. And we are watching it and preparing ourselves to be fully compliant by the date outlined by the regulators.
Any idea what kind of an impact it'll have in financial terms, in terms of revenue, for example, or increased costs?
Hard to say. Some of those, final rules are still being promulgated. They have not been finalized. Some discussions are ongoing, exactly what the date might be for phase-in and the like. So we will see how that plays out. But, from a TD perspective, we operate in many jurisdictions. We have been adapting to various different regulatory regimes. And I expect that the MiFID rules, in the end, will be more aligned with the international moves towards making sure that these things are coordinated and there are no unintended consequences.
Barrett, you've been a champion for financial innovation in finance, so I want to ask you about Bitcoin. Is your position on Bitcoin somewhere in between caution and disdain on that spectrum, or do you see it somewhere else, perhaps as a genuine financial opportunity?
Well, listen, any form of innovation in the beginning, it seems unsettling, and any technological innovation seems unsettling. So, the base technology of blockchain is attractive, to have a distributed ledger system that will make it simple and safe is very attractive. Bitcoin itself, I do worry about the fact that it is not as well regulated, the value is not as predictable. I think anti-money laundering issues where, controls might be required. I think all those will need to evolve and become far more mature before we can assess whether this is a real currency or not. And frankly, those are important issues. And we need to talk more about it because, we need a level playing field between different currencies here.
Those are important issues, but is your position then to try and find ways of incorporating cryptocurrencies into the business that you do, or do you feel that your position is better to resist?
Well, whether we resist or embrace will depend on how this evolves. But I can tell you fundamentally, blockchain, which is the core of how Bitcoin operates, is attractive. In fact, our bank has many initiatives in that respect. We're part of various consortiums out there. that, the R3s of this world to see whether on the payment space, on settlement space, is this attractive or not. With respect to the currency itself, it's a watching brief for us. We want to see how this evolves, but the points I'm making about, strict regulation, making sure it's compliant with all the rules that a bank requires to comply with, those are critically important if this is going to be credible. If it doesn't happen, it will not be credible, and this will be another fad that will go away its own way.
And your bet at the moment is on what? Credibility or fad?
It will evolve. Some years you'll say, well, this didn't work out at all, and some months you'll say, wow, a lot of progress there. So it'll go in ebbs and flows for a long time. I don't see it threatening, our current system anytime soon.
One last question for you, this one on credit cards. TD spent a pile of money to become the credit card issuer for Air Canada's loyalty partner, AMIA. Now Air Canada is ditching AMIA. Where does that leave you?
Well, listen, we have a great program. TD has been, part of the Aeroplan business now for a while. It resonates with customers. As Air Canada has already announced, there's no impact till 2020. And frankly, even after that, these points will be honored by Air Canada. So we feel great. We've got a whole suite of products in the credit card space, and there is a compelling card for any type of opportunity.
How badly do you want Air Canada's new loyalty business?
Well, it's hard to say. 2020 is a long time, Erik, and we will see. We are Canada's largest credit card company, and I expect us to remain so.